Well, it's a global risk-off is what has set in across the globe with massive tumbles across the equity market. Take a look at the US futures right now. Despite the sharp cuts that we saw on Friday, there's expected to be another 6% decline when US opens for trade today. A 6% decline on Nasdaq futures at the moment, and S&P future and Dow futures too are suggesting meaningful declines. That's because the volatility across the globe has spiked very sharply. If you look at the Japanese VIX right now, that's taken a hike of almost 130%. So it's moved up by as much as 130%. India VIX during the trading session was up 57%, the biggest intraday gain that we have seen on India VIX in a long time. And CBOE VIX in the US was also up over 50% when they were trading on Friday. Not just that, we are looking at circuit breakers coming in a lot of global markets. So the Japanese Nikkei right now is trading with a cut of solid 13%, the biggest intraday decline that we have seen in the Japanese market, at least in the last 20 to 30 years. You have the Kospi, which is down almost 11%. That's the Korean Kospi. That one is down 11% as we speak right now. India market in context of that is doing a lot more better. Now, while the Asian peers are down in double digits, the Indian markets are down just about 1 to 2%. And I'm saying just 1 to 2% looking at the overall screen that I talked about in terms of the US futures and the Asian markets right now. So your frontline index is down 3%. There is a bigger cut when it comes to the broader markets, but nonetheless, it's a lot better than what's happening in terms of the global markets and the rout which is underway. But why is this rout coming in the first place? Well, there was that data, the jobs data that came in the US on Friday, that has spooked the market as well. You have a lot of reactions coming in as far as the currency market is concerned. So rupee has hit the all-time low levels. We are staring almost at a level of 84 there. Even if you look at the Japanese yen, the carry trade is being talked about being unwound, wherein of course people were borrowing from in Japan, given the fact that the interest rates were lower there, the currency was favorable, and deploying it in global markets like US and Europe. That is unwinding, and that's the reason global market is coming under pressure. So yen has strengthened close to the 7-month high levels as well. We're also looking at a lot of movement when it comes to gold, which continues to trade near life highs, and of course the US dollar as well. But that is all because there is recession fear coming back to the US markets. In fact, if you go by what GS analysts are talking about, they're putting 25% probability of a US limited risk right now of recession. So that's something that we are watching out for as well. And of course, the overall clamor with the jobs data slowing down and the overall sudden expectation which is turned from rate stabilization to rate cuts in a rapid fashion. And that's the reason over the weekend, a lot of global experts were talking about as much as 3 rate cuts from the Fed in this year itself. In September, November and December, they're expecting consecutive cuts to happen. Warren Buffett perhaps sensed it earlier. He's sitting at a cash pile, which is at the highest level that we have seen in forever. And he's sold the maximum amount of equities that he ever has in a quarter. So probably he preempted it, or probably Street is putting 2 plus 2 together. But there is a major unwounding of trade happening right now in the global markets, and equities is coming under pressure. But